JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 13th of July 2021, guys. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the chart, so let's have a look at what's happening. So let's get a quick update. Basically with Nikkei, you can see that yep, it continued to push higher. It climbed above those two EMAs that I talked about yesterday, the 21-day and the 100-day EMA, and stayed above them both. So yep, for now, I mean, everything is kind of working in line with this idea that I talked about recently, or should I say last week, where I said that if we jump back above this 28,118 territory, then yes, we could potentially see maybe a bit of a larger, well, at this point it's a correction, because we're still trading below this downside resistance line taken from the high of the 16th of February. But so yep, we could see that move towards this downside line. So for now, that's what I'm going to be aiming for, as long as now at this point, as long as the price continues to trade above these two EMAs, the 21-day and the 100-day EMA, and then of course I'll take it from there. If we push further north and we break the downside line, certainly yep, higher levels could be met, but if by any chance this downside line provides resistance, then yep, another slide could be possible. Now jumping into Hong Kong's Hang Seng index, and look at this. I mean, the index is still open, it's still trading, and it's performing much better than its Japanese counterpart. And most important, we are after finding support near this 26,862 territory. The index started climbing back up, and it is now moving it back inside this rising channel pattern that I talked about previously. Of course, it's no longer that we're going to look at this as a rising channel, because we violated the lower bound of that pattern. However, I'm going to stick to some of these levels for now, and basically for the upside. Now, previously I talked about this level, the 28,590 territory, but we could actually start looking at, let me just put this one on the chart, we could actually start looking at this barrier, the 28,326, and as you can see, that level acted as a fantastic area of support in the past here, and then on the 5th of July it did provide resistance, and yep, if we clear that, we might also see the index getting placed above all of its EMAs, and yep, more buyers could join in. So something like that could be possible, guys. Again, at the moment, I will in order to consider that scenario, certainly, of course, a break of this level is needed. But first, let's see if the index today stays above that 200-day EMA and this lower side of the rising channel. If it does, then, well, like I said, then I'll start considering this idea. If it doesn't, if by any chance it drifts somehow back down here, well, and if it falls back below the 27,719 territory right here, then yes, we could go for that the current lowest point of July again. Okay, I can see the chat room here. Evo, yep, good morning to you too. I hope you're having a wonderful start of the day. I hope everybody else who is watching this, everybody's having a wonderful start of Tuesday. So, yep, guys, let's see what the market is going to bring to us today. But jumping into the charts here, I can see the S&P, for example, yesterday went on and created a new all-time high. Yep, we've hit the, let me just put this one on the chart, we've hit the 4,386 territory. There we go, right here. And yeah, now the big question here is, can we see a further move north? Well, of course, we'll have to be very careful for now. If we take a look at the cash index, just bear with me one moment. Just bear with me one moment. So yeah, if the cash index is currently trading at around 4,380 territory. So we're getting a bit of a corrective move here to the downside. So, well, to be honest, I mean, this could be seen as a healthy move because, well, it seems like every day we keep hitting these all-time highs. But nevertheless, the market is still strong, and we're still trading above some of these upside lines here. So one of which is this tentative one, taken from the low of the 4th of March here, and I'm gonna keep that one for now. I mean, don't get me wrong, there are a bunch of other lines that we could consider, but at the moment I'll just stick to this one. We'll see how it performs in relation to it. But if for the downside here, for example, to consider maybe a bit of a correction to the downside, well, a drop below the 4,361.62 territory right here would be needed first, and then yes, we could maybe see a nice good move here towards this upside line, towards this 21-day EMA, and then yeah, we'll take it from there. Of course, if we break that, then we'll start considering maybe lower levels. But at the moment, guys, everything's looking quite positive, and as I said, if in order for me maybe to consider a bit of a decline here, a bit of a larger correction to the downside, maybe a drop below this 4,362 territory is needed. So yeah, keep that in mind. Jumping into German index DAX, and yep, the index yesterday formed a new all-time high. It was just a fractional jump here above the previous all-time high. Let me just zoom in here a little bit. So the previous all-time high was around that 15,803 territory. Well, 802, 803 area, approximately around there. And yesterday we at least managed to hit the 15,806 territory. Maybe not a huge gain, but nevertheless, it was a new all-time high. And the index closed below the previous one. So if you follow my theory, guys, I mean, that means basically where I was saying that whenever we go and hit a new all-time high, but then, for example, the same day candle ends up drifting and closing below the previous all-time high, then there is a greater chance to see a bit of a setback, maybe a bit of a small a correction to the downside here. At the moment, looking at the cash index, we can see that the price is actually trading around 15,782 zone. So yep, below this level. So I would say that if it continues to do so, if it continues to trade below that 15,806 zone, which is the current all-time high, then maybe something like this here could be possible, where we could see maybe a bit of a retracement here back down, maybe even towards this 21-day EMA, and if it provides support, then maybe we could see a nice rebound and a push back up. But again, at the moment, like I said, guys, all eyes are going to be on the all-time high. Let me just mark this one very quickly. So the 15,800, and well, actually it's very close to even 15,807 territory. So yeah, probably we can round it up here a little bit and keep that 15,807 zone on our radars. And if we clear that, then certainly yes, higher levels could be met. This would confirm a forthcoming higher high. But as I said, if we continue to struggle to overcome the current all-time high, then, well, maybe a bit of a correction here lower could be possible. Now, jumping into DXY, the dollar index, and you can see that the index is trading near this this level here, the one that I talked about yesterday, and what I said yesterday, and I'm going to stick to what I said yesterday, that for now, looking at this picture, it's a little bit tricky here. I mean, on one hand, we are very close near this to this downside line taken from the high, the 25th of September. You can see that it proved a strong kind of area of resistance. So in a way, of course, if you want to aim for some higher levels, then the break of this downside line it would be needed. Also, maybe a push above this 92.74 territory could do the trick here for more buyers. But we are now examining this little territory here, the 92 zone, and I spoke about this one yesterday. And in order to maybe consider a bit of a larger correction, I would say, to the downside. The reason why I'm saying correction, because we're still trading above this short-term upside support line taken from the low, the 25th of May. So if we drop below this, then yep, we could maybe consider a bit of a move lower here, and then of course we'll take it from there. But for now, it's a tricky one, and let's keep an eye on these two areas. And if we do get a break through one of those, then that's when we will consider the next short-term directional move. I can see in chat room here, Erica, good morning to you too. I hope you're also having a wonderful start of Tuesday. But coming back to the charts, guys, I mean, gold, you can see that gold is still struggling with this area right here, with this 208 EMA, with this downside resistance line taken from the high of the 7th of August. I've mentioned this one in my previous videos, and basically for now, I mean, although I draw this this scenario previously, I mean, for now I'm gonna maybe stick to it, because it's gonna be quite interesting to see if we drop below the 1795 territory. Then yes, maybe a bit of a decline here could be possible. However, at the moment, if by any chance the dollar index starts kind of dropping, and it starts devaluing, then, well, I mean, we could see gold actually breaking this downside line and pushing higher. And for now, I'm gonna, like I said, I'm gonna stay probably a little bit maybe on the neutral side or something like that, because again, here it's we are very close to this downside line. But if that gets broken, guys, I mean, then yes, of course, higher levels could be met. But in a way, I mean, as long as this downside line stays intact, certainly the more likely scenario is to the downside. However, again, this is the point where I don't want to say a lot of things here, because again, it's a very tricky situation here, and we are stuck in between these EMAs here. So I will keep an eye on these two levels. For the downside, the 1795 territory, and for the upside, actually we could take a look not only at this downside line, but also at the high of last week near the 1818 level. And if that gets cleared, then yes, we could go for some higher areas. Now jumping into silver very quickly, and yeah, you can see that the commodity is also trying to make its way higher here, but again, it does have a few obstacles on the way higher. So let's see how that's gonna play out. But again, I'm gonna repeat myself here. In order to consider the downside, I would like to see a drop below this 25.71 territory right here. And I would like to also see the daily candle staying below it, and then yes, maybe lower levels could be met here, especially also if we overcome this 208 EMA. But for the upside now, this is where first of all I'll probably now get rid of this upside line which we had previously here. Now what I'm going to do here is I'm going to stick to this little short-term downside resistance line taken from the high of the 18th of May, and I'm going to keep an eye on this hurdle here, the 26.73, which which is going to be the one that I'm going to be keeping an eye on. If we clear that level and we stay above that level, then yes, I'll aim for that downside line, the one that I just mentioned. Now jumping into WTI oil very quickly, and here you can see that this upside line continues to provide resistance because we're testing it from underneath. If by any chance this continues to happen, then certainly, of course, maybe the downside scenario is not really off the table yet, especially if the price starts falling back below the 72.68 zone right here. You can see that this level here, the 72.68, is marked by the high of the 15th of October of 2018. And also, if we drop below this hurdle, then yep, we would see the daily, the commodity actually dropping below the 21-day EMA, and potentially this could attract a few extra sellers into the game. Bitcoin is still stuck. I mean, to be honest, it's not much. There's not much excitement. I mean, since kind of the beginning of July, and this crypto continues to get squeezed. And basically, for now, I mean, we could probably draw something like this here. Let me just put the other one, and I think it's more of actually descending triangle here that we're seeing. But let me just quickly check this. Okay, so this is not an ideal one, of course, but nevertheless could be a potential descending triangle pattern here. So yeah, there we go. If of course, as we know, according to all the TA rules, these patterns tend to break to the downside, but until we actually get that break, we cannot really get comfortable with lower levels. So that's why we're going to wait here, and this area here is roughly around that 32,000 kind of 500 level, approximately around here. So yep, if we clear that, then potentially there is a good chance for a further move lower here. For the upside, certainly I need to see a break of this downside line and a push above the 21-day EMA, and also a push above yesterday's high near the 34,655 territory right here. And then yep, we could consider maybe a bit of a bigger jump here towards the towards this 200-day EMA. Now jumping into a few pairs very quickly, AUD and ZD. I talked about this one yesterday, and I said to you guys, keep your eyes on this little short-term tentative downside resistance line taken from the high of the 18th of June, and you can see why. So we managed to break that, and now we are struggling with this 1.072728 zone. I spoke about this level yesterday, and I said that in order to kind of get a little bit more excited with the upside, yes, a push through that area would be needed, and as you can see, it would also place, for example, the pair above the 200-day EMA, and potentially this could attract a few more buyers. Nevertheless, we will be very careful with the upside because, again, at the moment it's a bit difficult here. I mean, the two kind of with the two commodity-linked currencies here. So both of them are kind of, let's say, if markets suddenly start reversing lower, then we could see both of those currencies devaluating against their other major counterparts. But it will be interesting to see which one would outpull which here in this battle between the two. For now, it seems that yes, Australian dollar is trying to get back into the game here, and it's trying to push higher, but looking from the technical side here, we'd prefer actually to wait for push above the 1.0728 territory right here, and I would like to see the daily candle remaining above that area as well in order to go for slightly higher levels. Now jumping into USDCAD, and of course, certainly today, we looking at the economic calendar, we need to keep an eye on the U.S. inflation numbers. So yep, so both core and headline ones. So keep that in mind. Let's see how that's going to play out, guys. I mean, at the moment, if we take a look at the USD CAD here, it's a bit of a mixed situation because basically oil has managed to recover, and we saw this pair now drifting to the downside here a little bit. But again, looking at this picture here, you can see that there is still a chance for the bulls to step in here. However, given the difficultness, if I can use that word, of course, given the difficult kind of situation here as well, I would actually prefer maybe to wait for a push above this 1.2590 territory. That's the high of last week, and at the same time we could also, if we break that level, of course, we could also see a push above the 200-day EMA where potentially more buyers could join in. So yep, that's why I will, like I said, I'll take a bit of a conservative approach, and I'll wait for this level first to get broken in order to aim for some higher levels. For the downside, well, let's basically, from the very short-term perspective, I would say that if we drop below yesterday's low, this could open the door towards slightly lower areas here, towards these two EMAs here, the 100-day and the 21-day EMA, and maybe then we could even test this upside support line taken from the low the 1st of June. So for now, guys, that's the kind of little game plan here on this pair, but again, let's not overcomplicate our lives here, and let's not try to predict way too far into the future here, but let's keep an eye on these two levels that I just mentioned. Quickly on USDCHF, just a quick update. Basically, the same analysis remains, and for now, I will stick to this level here. It seems that we could be forming a potential kind of bearish flag here. You can see the pole here. I mean, it's an upside down flag here, as you can understand. We have this pole, and we have this little kind of flag forming right here. So keep an eye on this level. Keep an eye on this 0.9142 territory marked by the low of the 25th of June. As you can see, it also coincides here with the 200-day EMA, and if we clear that, then yep, in a way this could open the door towards slightly lower areas. Now, US dollar against the Turkish lira is something that I talked about yesterday as well, and as you can see, there is a bit of a battle here happening between the bulls and the bears. Yes, we managed to violate the lower side of the little triangle that I talked about. We also dropped below the 21-day EMA, but it's currently, you can see that the bulls are still kind of trying to keep this one inside the pattern. However, at the moment, guys, I'm kind of leaning a little bit more towards the downside here on this pair. But don't get me wrong, I mean, still certain confirmations are needed. So although yesterday and today we violated the lower side of this little triangle pattern, as you can see, the bulls keep pushing the rate back inside this pattern. So again, if you want to get a little bit, let's say, more comfortable with lower levels maybe in the near term or medium term, then maybe just a drop below this low, the 23rd of June here, near the 8.59 territory, approximately around here, could be ideal here. And yep, this would confirm a forthcoming lower low, and potentially could open the door towards these levels that we saw here in the beginning of June, like for example the 8.26, 27 zone, or even below that. Now jumping into GBP CHF here, and yep, look at this. I mean, look at this beautiful rebound from this this tentative downside resistance line that I have drawn a while ago, and yep, we had a nice push from it, so it somehow did its job and provided good support. And now we're trying to climb higher again, and we're trying to get back to this 1.2789 territory right here. But again, of course, don't get me wrong, in order to see that move, we need the pair to jump back above the 21-day EMA here, and yep, then we could aim for this area, and then if we clear that once again, then yep, once again I'll start aiming for higher levels. But at the moment, I'm keeping an eye on the 21-day EMA. If we push above that, then yes, I'll aim for that 1.2790 territory. Well, let's round it up here a little bit. Quickly on euro against the South African rand, guys. Due to the kind of difficult situation right now in South Africa, you can see that yesterday, for example, on the open, when the markets opened on Monday, I mean, this pair jumped initially heavily, I mean devalued against its euro counterpart, a European counterpart, and pushed higher, but then tried to kind of the bears kind of tried to step in here, and they did push the pair back down. So basically, a lot of things now need to be adjusted here. And if you have no clue what's happening right now in South Africa, well, I mean, guys, like I said, it is a little bit of a difficult and sad situation. So yeah, check that out. But this is where the South African rand could get hit again. But from the technical side, I would say that if in order to aim for some higher levels, well, wait for that push above the above this 17.3440 zone, somewhere around here. That's near the yesterday's high, and if we clear that, then yes, this will confirm a forthcoming higher high, and potentially more buyers could join in, and then we'll take it from there. But for the downside, in order to consider maybe lower levels, then certainly drop somewhere below this little area right here between the 16.77 and the 16.83 territories, yep, would be needed, and then we could aim for that lowest point of June. And finally, EURUSD here. So looking at this picture, for now, it's stuck. The pair is stuck, and it's not really doing much. I mean, I'm still sticking to the same analysis that I mentioned yesterday, that in order to consider maybe a bit of a larger correction here to the upside, a push above this 1.1878 territory would be needed. For the downside, a drop below the 1.1836 territory here would be required as well. So basically, in other words, I'm still keeping an eye on these two levels, and I'm waiting for a clear move through one of those in order to consider the next short-term directional move, guys. So keep that in mind. So, okay, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time. I really hope you found it useful, and I really appreciate your comments, your likes, your views. I really do. So, I mean, very modest of me, but keep it up. so yeah, but thank you very much for that, guys. I really appreciate it, and I hope you'll have a fantastic trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.